I'm Motley Fool Canada Senior Analyst Nick Seipel, and this is the 5 Minute Major, here to make you a smarter investor in about 5 minutes. Today, we're discussing investing in Canadian real estate. My guest today is Motley Fool Canada Chief Investment Officer Ian Butler. Ian, thanks for joining me once again.
Great to be here, Nick. I wish it was a sunnier day on the markets, though. We're recording this on Thursday, November 13th, and the markets are getting rather thrashed.
Yeah, you know what's not bouncing around today? Real estate. Real estate.
Nice.
Each one is unique entity. But real estate has been hot in Canada for years. Sometimes seems like everybody is in the market trying to become a landlord. We're here to tell folks being a landlord, maybe not all it's cracked up to be as a real estate investor. Why is that?
Yeah, and I mean the market has cooled off a bit, but for the bulk of the past 20 years, maybe longer, actually, definitely longer. Most of the casual investment related conversations that I've stumbled across in the real world have pertained to real estate and specifically housing, not stocks, to my chagrin. Personally, I've benefited alongside many Canadians as far as house price appreciation has gone. But in my opinion, there are a lot of practical flaws that go hand in hand with investing in physical real estate. Included is the fact that it's a lot of work to be a landlord. Frankly, I've never been a landlord, but I've seen landlords in action, and they are always up to something. Some get around this by paying management fees for others to look after the legwork, but that's well and good, but it does eat into their returns. But for those that choose to do it themselves, they're literally tending to the well-being of another house. In some cases, many other houses, and houses are work. I am a homeowner. For instance, I mean, here in this house, we just had a dishwasher break this morning. I spent an hour flailing around trying to fix it. And the bottom line is we have somebody coming on Monday afternoon to look after the situation. So beyond the physical labor, there's dealing with tenants. This brings a multitude of variables into play because let's face it, dealing with people can be hard as well. So you got a physical dwelling that's an ongoing source of chores and people that live there, which can also be hard to manage. So to me, this doesn't sound like a pile of fun. However, there are three reasons why I think people suffer through these dynamics. Again, for much of the past 20 years, housing prices have only gone up. I think what people don't realize, though, is that increasing house prices have benefited from the massive tailwind created by persistently declining interest rates. So interest rates were sky high in the 80s. They were on a descending trajectory thereafter. Thing is, though, they can only go as far as zero. And once that limit was hit, it was achieved a few years ago, the tailwind really disappeared. So that's no longer in play. Second reason is leverage. And I think maybe a better way to say this is people don't fully understand leverage. Most borrow big sums for these investment properties, and that's great. When houses prices are just going higher, it magnifies the equity gains significantly. But when prices stagnate or even roll over a touch, the gains disappear in a hurry and can even turn negative. And I think people that purchase investment properties over the past 5 years or so, especially, are finding this out. And the final reason why people suffer through is that unlike stock prices that move around on a second by second basis, and we experience days like we're experiencing today, which can wreak havoc on one's emotional state, housing prices, as you alluded to in the opening, Nick, are relatively static. If there was a sign on every house that had a second by second value for that house moving, I think people might think of investing in real estate differently. So all this said, there's room for investing in real estate in one's portfolio. It's just that I think there's a better way to do it, and that is by owning real estate investment trusts, which are also known as REITs. You can garner similar exposure. Actually, you can garner better exposure because REITs are diversified across all manners of real estate. We're talking single family housing, multifamily dwellings, office, industrial, malls. The list goes on. You never have to worry about costly repairs or upgrades. REIT owners enjoy a similar stream of income and have none of the headaches described above. And the only anguish you need suffer is that because REITs are publicly traded, they have a stock price that will bounce around as stock prices do.
Okay, Ian, you've convinced me. I should invest in REITs. I don't want to go through all the work of being a landlord. I want to put money in and just collect my dividend checks and have truly passive income. But there's lots of REITs to choose from out there on the public markets. Is there a REIT or group of REITs, a subsector of REITs in the Canadian market where you see value right now?
Yeah, and I think I mean, it's coincidence that this has centered around housing-related real estate, but REITs that own multifamily dwellings are of interest right now, and one in particular has my attention. It's called Canadian Apartment Properties REIT, also known as CAP REIT, kind of the short form. Ticker there is on the TSX CAR.UN. And this is an entity that owns more than 45,000 residential apartments and townhouses across Canada. And that's exactly where many of the real estate investors that I've come upon anyway are focused. Best part, though, I think, is that Cap REIT's price is down by more than 30% since it hit an all-time high back in September 2024. That steep decline has left us with a 4% distribution yield, and you got to go all the way back to 2017 for the last time the yield was that high. So, saying this slightly differently, not only is this a hands-off way to gain exposure to an asset class that is very hands-on in a lot of ways, right now there's even a valuation case to be made. So again, that's Canadian Apartment REITs. CAR.UN.
Yeah, value investment with truly passive income. That's the kind of real estate investment I like to be a part of. Ian, thank you for joining us for this edition of the 5-Minute Major. I want to remind our viewers, if you want more stock ideas from us, you can click the info icon in the upper right-hand corner of your video screen. Hope you enjoyed this video, and we hope we'll see you next time. Fool on.